Hi, good afternoon. You're with Halftime Report. I'm Samira Abdi and with me is Nigel D'Souza. Hi, Nigel. Good afternoon to you. Well, for the market, as of now, we're just seeing slim gains. So close to 99.50 is where we're holding on the Nifty. We've come off of the high point for sure. Even the mid-cap index matching step with the frontliners and just seeing very, very minor gains. Hi, Nigel. Good afternoon. I guess everyone's taking it easy before the weekend?
I think they're taking it easy, Sumera. You know, buying before the weekend hasn't proved to be too good because over the weekend we have Trump, we have North Korea, something or the other happens on that front. So I think the second half of trade, you could see some lightening of positions actually. So let's see where we go from here. For the time being, at least, we're flirting. We're around that 9,950 odd mark. But first up, though, let's run you through all the top stories as we speak. The markets are quite ahead of the weekend, supported by L&T as well as metals. Frontline indices trade mildly in the green. The mid-caps do show no zeal.
Larsen and Toubro soars in trade after Citi maintains a buy call on the stock, increases the target to 1452 from 1341. Says it's their top industrial pick with a huge upside potential.
And the pharma sector is under pressure today. Dr. Reddy slips over 3% after receiving 6 major observations for their Duvada unit from the German regulator. Glenmark loses as in fact Credit Suisse cuts its target price to 650 from 700 earlier. Biocon bucks the trend to gain 3% after its Malaysian unit gets a nod for the European markets.
Turnaround is going to be expected to be delivered by the end of this fiscal year.
In his first in-depth interview since taking charge, the MD and CEO of Tata Motors says the company can turn profitable in the next 9 months, adds that the Nano is under review and he will present a new passenger vehicle strategy to the board soon.
And the GST Council to meet in Hyderabad tomorrow for the third time since the rollout of the new tax regime. Mahindra & Mahindra stock slips as sources say the council is likely to look into the treatment of hybrid cars and levying of cess on luxury cars.
And Indraprastha Gas gains in trade after Road Transport Minister Nitin Gadkari makes a pitch for green technology in vehicles, uses a colourful turn of phrase to urge the industry to invest in alternative fuel. All right, so those are all our top stories. Let's get started and talk about stocks. It's time for movers and shakers. And on the top of the pack, we have Dr. Reddy's. Ekta, over to you.
Well, the news on Dr. Reddy's is that the German regulator has inspected the company's Duvada facility. They issued 0 critical observations, but 6 major observations post the inspection. Now, the company has said that they will be submitting a corrective action plan to the authorities and they will receive possibly an EU GMP certificate, which is a European Union certificate of compliance, only up to November 2018. Only if the CAPA is approved. Now, the compliance will again be reviewed by the regulators by November of 2018 for a continuing certificate. Now, remember that the products manufactured at Duvara right now are not even supplied to the European Union. And overall, to give you a sense on how important the facility is, it is quite important. The Duvara facility is a fairly new facility and it manufactures oncology formulations. Now, what exactly is the impact of this? There's more of an issue with regards to regulatory as opposed to fundamental, because like I mentioned, there's barely any sort of sales which come out from Duvada, both for the US as well as the European Union at this point in time. But this is the second regulatory concern which has risen post in the past 1 month when it comes to the European Union. In August, remember that Dr. Reddy's FTO Unit 2 at Bachupalli was termed as non-compliant by the German regulator. Now, shift focus to the US FDA. The US FDA had a warning letter outstanding on the Duvara facility since 2015. It was re-inspected in March of 2017 and issued 13 observations, which according to analysts, there's a high chance of it even escalating to an import alert. Bachupalli also was inspected by the US FDA and that too had received 11 observations. Bachupalli is important because it's an important formulation unit when it comes to their US operations.
All right, thanks so much for that, Ekta. Well, let's focus on another stock. Future Enterprises. Pull up a week-to-date chart. You'll see that the stock has gained more than 25%. And that stock, even in today's trading session, as we speak, it's up closer around 6%. Mangalam joins us to run us through all the details. Mangalam, what's the buzz there?
A lot of things happening, Nigel, seems like, because the stock is up 32% this week itself. The future group stocks themselves are up. And a handful of reasons, the latest one being the disclosure that came onto the exchanges today on pledge release, where the promoter, they've released a pledge worth nearly 3.4 crore shares, which is about 8% equity on September 1. So that was the disclosure that came in today. With this, the promoter's pledge, which stood at around 30%, now falls down to 21.5%. The second reason, the promoters, they're buying from open market. I was going through some BSE data, and in the disclosures between 5th to 7th September, one of the promoter entities, which is Central Departmental Stores, they've bought nearly 34 lakh shares in the last 3 days itself, which amounts to 0.8% equity. Remember, they hold 46.5% stake as of June 17. The third reason is their stake in Future Consumer. Remember, their group company, Future Consumer itself, is up 36% this week, and Future Enterprises holds about 9% stake in that company, worth close to about 1,000 crore rupees. So that is the third trigger. The fourth one, of course, is the various value unlocking steps that the company is taking. Remember, they have filed a DRHP for their logistics arm, which could be valued anywhere between 800 to 1,200 crores, and they have their stake in the life insurance business, which Varinder had told us about, worth nearly 2,000 crores as well. Apart from that, they earn rent from the future retail stores as well. So all these put together, 30% move in today's trading session, 250% plus in this year itself.
All right, Mangalam, thanks for that. Ekta, why are you tracking Vista Pharma?
Well, the news on Vista Pharma is that their formulation facility at Telangana was inspected by the US FDA in September of 2016. The company has informed the exchanges that they've received an establishment inspection report, or an EIR, from the US FDA, which basically indicates closure of the inspection by the US FDA. Now, we need some clarity because the US FDA had issued a warning letter to the company's Telangana plant as early as July of 2017, and the inspection had taken place in September of 2016. So we're assuming it is the same formulation plant that they had received that particular warning letter for, and how exactly the timeline of things have taken place, and whether an EIR in this case only means that it is a closure of the inspection and that the warning letter is still outstanding. So there's some clarity needed at this point in time with regards to this particular piece of news.
Okay, Ekta, thanks so much for that. By the way, the stock is up close to 20-25% in this week itself, so just keep an eye out on that front. It's up 5% today, but in the week, it's already seen a big run. But let's get in Ronit then. Ronit, you want to tell us about L&T? There was a brokerage report on that one.
Yeah, so Citi have come out with a note on L&T, and they've upgraded their target price to 1,450, which is 8% higher from their earlier target price. So, you know, what they're saying is L&T right now is their top industrial pick among all, and this has been replaced by Bharat Electronics, which was their earlier pick. Second, they say that L&T has limited downside at current levels because, you know, the stock has underperformed the index by around 8% in the last 4 months. Additionally, it is the cheapest stock in the India industrial coverage. On top of that, they revised their EPS by around 1 to 3 on the upside. And they say that the target also factors in a change in the market price of L&T Finance. Remember, they own around 64% in L&T Finance, and the stock is up 100% in the last 1 year. So on the back of all of this, the stock is up 3% today.
All right, thanks much for that. Sonal, why are you looking at Nitish Estates?
Well, it looks like rental offices and malls are attracting a lot of foreign investor attraction. Now, reports suggest that GIC and Abu Dhabi Investment Authority are in fray to acquire controlling interest in Nitish Hub, which is a subsidiary of Nitish Estate, that is a South Indian real estate player. Now, Nitish Hub is valued at around 600 crores and operates on a land of around 1 million square feet. Nitish Estates plan to divest 51 to 60% of their stake in Nitish Hub, which will be valued at around 300 crores. Why is it interesting is because market cap of the company is around 145 crores. They have cash in books of around 2 crores and short-term borrowings of 292 crores. So any cash inflow will be quite positive for the company, and that's why the stock is buzzing in trade today.
Okay, Sonal, but we can't let you go on that one. You have another big buzzer, that's Punj Lloyd. Stock has been doing well this week. It's had a good run in this week itself. What's the news there?
Well, it's raining orders for Punj Lloyd, basically. Today, the company has been awarded order worth 870 470 crores, which is order issued with respect to construction of canals. This is followed by the order that the company received yesterday of around 1177 crores. That is the NHAI order, and that had to be completed in 36 crores and was funded by the ministry. Not only that, on August 10, 2017, the company received an order worth 478 crores. Now, interesting thing to look is that the company has an order book at around 10,700 crores, and on the back of all these orders, the stock has been buzzing today, and in last 1 month, it has given us gains of around 26%. So yeah, today also we are seeing these gains.
All right, thanks so much for that, Sonal. Well, Nalco, that was the big buzzer yesterday as a result of this sharp spike we've seen in alumina prices. The stock, however, has given up those gains today. The management has guided to expect net profit to increase by a whopping 45 to around 50% in FY18, but they add that caustic soda prices have surged, and that's what aided DCW up close to around 15% this week. Let's hear out what they had to tell us.
There has been a significant increase in the caustic soda price, and caustic soda market in the next 2 to 3 quarters is going to be an internationally short supply market. So the prices of caustic soda will remain uptick. And combined with that, we are hearing that by November, China will ensure compliance of production cut in bauxite mine and alumina refinery. If all these things goes in tandem, definitely the prices which are there, it will hold. And I expect that it will be somewhere around $350 to $400. It will be moving around alumina prices. We are expecting that our net profit may be increasing in the margin of around 45 to 50%.
Okay, another stock in focus is Plaster Blends. The company has reported a subdued first quarter, but the management is quite optimistic. They say the margins should improve to about 11 to 12% from next year, and that they're targeting a turnover of about 900 crores, I beg your pardon, by FY20.
FY18, we see a growth of 5 to 10%, and FY19, it may be between 15 to 20% growth. FY20, we expect turnover to grow to about 900 crores, and export may be about 30-35%.
Okay, then let's do a quick recap of all the buzzing stocks that we covered. We have Dr. Reddy's future into 5%. Select gainers are up for you on the screen. Universal Cables, that stock is spiking up. Even this week itself, the stock has gained close to around 15-16%. So let's pull up the intraday chart over there. Radico Khaitan as well. That stock continues to move well. For this year, the stock is up more than 55%. And as we speak, volume's picking up there as well. It's moved to the high point of the day. So just keep your eye out on that stock. But shifting focus then to the insurance space, CNBC-TV18 learns that 2 new companies could soon be part of the Indian standalone health insurance space. Yash Jain joins in with more details. Yash, clearly the health insurance space is getting all the attention, isn't it?
Well, absolutely. The Indian health insurance space is all set to expand and expand in a big way after Reliance Capital announced its decision to start a separate health insurance vertical. We are given to understand that 2 more companies may soon join India's standalone health insurance space. I'll go one by one here. The details which we are picking up on the first company is that the first company would be called Jiva Health Insurance, and Jiva Health Insurance would be backed by 2 private equity players and 1 private individual. The 2 private equity players involved with Jiva Health Insurance would be Sabre Capital and a domestic fund which is called Avishkar, and the private individual involved with Jiva Health Insurance would be P. Nandgopal, who's the former MD and CEO of India First Life Insurance. We are also given to understand that Jiva Health Insurance would start its business with an initial capital of 150 crore. CNBC-TV18 reached out to Sabre Capital on this story, and they said that they are excited about the Indian insurance space, including all 3 verticals, which is life, general and health, but they have denied CNBC-TV18 story. Also, talking about the second company, what I'm given to understand is that the second company will be called O-Care Health Insurance. This company also is likely to start its business operations with an initial capital of 150 crore, and in fact, the company is in the process of filing its papers with the insurance regulator by mid-September, and that would be to receive IRDA's R1 or the first level approval for its health insurance business. CNBC-TV18 also reached out to Ocare Health Insurance, and they've said that they cannot comment on CNBC TV18 story. So clearly, it is very evident that the next board meeting which the insurance regulator would have, which is expected to be around end of October or early November, will be very crucial, of course, for these two companies and also for the standalone health insurance business in India.
All right, Yash, thanks much. Let's shift focus then to the primary market space. Dixon Technologies' 600 crore rupee IPO will be closing for subscription today. As of 5 p.m. last evening, what I gather from the NSE website is that the qualified institutional buyers have the subscription amount is almost 9 times, and overall the subscription amount is 4.25 times. For the retail portion, it's come in at 3.27 times. Ravi Kataria, the managing director at Investment Imperative Associates, joins in with his take. Hi, Ravi. I guess pretty much everyone has already applied for it. It's the last day today for those who are still waiting. You have a subscribe rating. Can you take us through the rationale and what's the upside you see?
Sure. See, the company on the face of it would look like is having a higher valuations if we see it from the general indexes perspective. But overall, the sector itself is commanding such valuations. You're drawing parallels with the China-based electronic companies like Panda, Legend, who in the early 2000s used to command such valuations. Now, Indian consumer electronics is, from the manufacturing perspective, is at very nascent stage. It has just begun. The localization of the products in air conditioner, white goods, mobile phones is just 30 to 50% in majority of the product categories. So that's why institutional investors, private markets are seeing a lot of traction in this sector. Goldman Sachs took over 50% in Umber Enterprises last year. PG Electronics is another play which has diversified portfolio in automotive and consumer durables. Centum is catering to 6 to 7 different sectors in the space. So all these deals and transactions are currently valued anywhere between 40 to 50 price to earning. So Dixon currently, we are estimating on a 1-year forward basis would command around 31, 32x on the post-IPO numbers that we are crunching. So we are looking at 15 to 20% kind of a return on the table for the investors in the short to medium term, and a long-term story because we are seeing a compounded growth rates of more than 30% on the top line and the bottom line as well. We are looking at decent returns for the investors in a medium to a long run as well. So Steadview Capital, anchor investors like Goldman Sachs, Kuwait, investment authorities, even the local institutional players are taking a lot of traction or interest in the IPO and the other companies in the sector.
Absolutely. Ravi, so you're clearly saying that go ahead and subscribe it, but what's left on the table then? When you're subscribing to an issue at around 30, 40 times approximately, I'm looking at the grey market premiums as well. Well, that's pretty hefty. But someone who's subscribing today, what kind of gains are they looking at in the next couple of years? And also, you're talking about peer comparison. You're talking about quite a few unlisted players or players that are listed overseas. Who could be a peer if we are looking at it? I remember Mr. Tulsian telling us that, he was looking at Leel, L-E-E-L, and that stock has given us more than 30% just in the last 10 days.
Yes, there are a couple of other players as well. PG Electronics is there. Centum Technologies is there. These are the two. MEC Electronics is there. They are having almost a similar kind of a portfolio in the space. So they are trading at 40x to between 45x on a 1-year forward earning basis. Okay. And these stocks have also returned heavily over the past 1.5 years. So overall, the space is picking up. It might look like the IPO is pricey, but it is certainly expected to yield some returns for the investors in a short to medium term too. So we're looking at 15% to 20% in the short to medium term, and a compounding of around 22% year-on-year basis on a long term.
Okay, all right, Ravi, thanks so much for stopping by and giving us all those details. So that's Ravi Kataria. He's saying clearly go ahead and subscribe it. It's valued at around 35, 40 times, but going ahead with the kind of earnings growth that we're likely to see, well, it could settle at around 31, 32 times its forward earnings. So the short message is go ahead and subscribe, and our ticker team is alerting you all the subscription details. It's had a good subscription that we've seen the last few days, and grey market premium as well.